The market reaction's been a little confused this week from the banks. I think particularly with the Fed, the dovish comments have taken the market by surprise, starting with 4 hikes priced into the market in December, that coming back to 1 at the beginning of the year, and now sort of growing into 1 into the FOMC. Now the market's wondering, what is the Fed data dependent, or are they really trying to signal that they're going to be a little slower, a little behind the market, and they'll wait for the market to push them into the next hike rather than perhaps guiding the market into the hike themselves? We see a couple of implications for this for the market. One is, as opposed to preferring a curve flattener into a hiking cycle, this makes us think that curves could probably steepen as those inflation pressures build and inflation expectations build. And then, of course, along with that, finally, we hope inflation expectations and inflation markets will continue to rise as well. And we see those as being a couple of our key strategies for the medium term.
And so, Katrina, looking at those factors, this month of March has been relatively stable in terms of the markets when you consider all the volatility we saw in January. Do you expect that to continue as we move into April?
Well, it certainly was a tumultuous beginning of the year. I can't remember a year in markets where we've had such an incredible rebasing of expectations in the first couple of weeks of the year. As you say, things have definitely subsided now. I think we're probably focusing on the Fed a little bit more rather than China concerns and oil concerns, as you pointed out. But I think that those concerns may have faded now, but they certainly could come back at any time. China is definitely going through a huge restructuring, and it will have bumps along the way. In terms of oil, as you were just saying, it has reached a relatively high level right now. We think, we would agree with you, that this is sort of maybe a ceiling around here, and we don't expect it to increase a lot further from here, and that fall back to say $30, and we think that it will trade in a range of say $30 to $40 this year, could be a concern for markets, but the fact that we have a base now may be helpful. The other thing that we see as really important, and we don't think the markets fully understand yet, are some of these unintended consequences of negative interest rate policy. It has sort of, I think, worked well for the beginning parts of that when a few banks were doing it and only going to sort of -10, -20 basis points. But we're now at -40 basis points by the ECB, and as you say, Kuroda's saying he could go lower. We think there could be huge implications for the banking system, as well as longer term needing to think about what that means for savers in the economy. And as we know, demographically, the world's probably getting older, and there are more savers in the economy now.
Katrina, we certainly saw a huge bounce for Asian currencies coming out of the Fed statement. Looking at the Aussie dollar here at an 8-month high. Now, do you expect the RBA to stay on the sidelines as we see it continue to gain strength?
It's certainly making the RBA's job more difficult. I feel that the RBA wants to be a little cautious here. They have a relatively high official rate relative to a lot of the globe, but as we've seen in other countries, that can be eroded fairly quickly. There have been some good signs in the Australian economy recently. Unemployment data yesterday was fairly positive and has been for the last few months. GDP in Q4 was okay. But as you say, that Aussie dollar is probably higher than they would be comfortable with right now, and it will certainly bring back more probability of a cut for them. In our own base case, we do have them easing again in 2016. Perhaps not at the May meeting though, just given the strength of the employment data and the inflation data recently.
Great. Sorry to cut you off there, Katrina King. We'll certainly just have to leave it there because of time, but appreciate you joining us on this Friday live from Sydney today.